All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. They even offer some of the highest yields in the industry, like the bond account's 6% or higher yield remains locked in even if the Fed cuts rates. What sets Public apart is how they give you the tools you need to make informed investment decisions. Their built-in AI tool called Alpha doesn't just tell you if an asset is moving, it tells you why the asset is moving, so you can actually understand what's driving your portfolio's performance. Public is a FINRA registered, SIPC insured US based company with a customer support team that actually cares. Bottom line, your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/investing unscripted and get up to $10,000 when you transfer your old portfolio. That's public.com/investing unscripted. Paid for by Public Investing. Full disclosures and podcast description. Hey everybody, welcome to Misfit Monthly. Don't touch that dial if you were expecting to hear Investing Unscripted, because this is Misfit Monthly brought to you by Investing Unscripted. Might be hard to tell right now, but the guy behind the scratchy voice, I am indeed Jason Hall, getting over a little bit of a cold here. I'm joined by Tyler Crowe, somebody that's familiar to those of you that watch our YouTube videos and longtime listeners of our podcast. You've heard Tyler on a few times. Jeff and I had a conversation a few weeks ago about our plans for the podcast and our long-term goals. And one of the things we talked about is adding other content to it. And Tyler's a real close friend of the podcast and somebody that Jeff and I both know really well. One of the things that came up was helping people find the work that Tyler does, and also helping Tyler with the thing that he's not great at, which is helping people find the work that Tyler does. And that led Jeff and I to decide to pitch to Tyler, adding a monthly stream to our podcast feed, and it's called Misfit Monthly. Hey, Tyler.
How's it going? It's fun. It's kind of like I was a recurring character on Saturday Night Live, and then they're like, yeah, I guess we'll just add him to the cast now.
Maybe more like Seinfeld, though.
Like one of the really bit players who all of a sudden, would show up 2-3 times a season.
There you go. Exactly. No, we're excited to bring this into the fold, to lay the groundwork. Our plan is, it's right there in the name, Misfit Monthly, to have a conversation. And it's usually just going to be me and Tyler. Jeff may join us every once in a while. Of course, he's the one that has the day job in another world, so it's a little harder for him to match up with our recording time. But our goal, our plan is to highlight and talk about some of the investing opportunities out there that maybe don't get talked about enough. And today's episode, Tyler, we're titling it The Big Lessons from 100 Misfit Stocks.
Yeah, we came up with the idea mostly because I'm right around about writing 100 profiles of companies for Misfit Alpha. It's been about it's actually, I think, 2 years this month. So 2 years of publications, profiles on companies, digging into, what makes a company that, not everybody knows, not the most popular businesses out there in terms of getting media attention, the unsexy things, the things that have, kind of been in the background for a very long time, but have created incredible wealth. And what are some of the things that have allowed these sort of companies to thrive? And so this was the project that I wanted to go out and it was basically find these companies, identify who they are, and then take it one step further and start to piece together what makes these kind of businesses successful. Are there any common traits across every sort of business out there, whether it's in healthcare, whether it's in automotive or finance, financials, banks, credit card companies? Where are the ones that are successful that, what's the common thread? And so that it's been like an exploration project of helping to identify how these kind of great companies work without going into the directly buy this, buy that, don't buy this, don't buy that.
Teaching people how to fish, or where to look for where the fish might be, maybe as a metaphor.
Yeah. And looking at through the lens of a company each time. I feel like even the most boring company, I guess was the term that a lot of people would say, or the most obscure company, there's always a poignant question or a poignant lesson to be had from each of them. And so it's a way of taking something that isn't a well-known company and turning it into maybe a thought experiment.
So what I would like to do to kick things off, let's talk about the beginning of what has become Misfit Alpha. What led you to that? And then after we talk about that, I want to talk about your history as an investor, kind of getting into the roots of what brought you to the realization that there's some unique factors here that I want to explore. So let's start with that first part. What was the catalyst that led you to, and how many years ago now? I think we're at least 3 or 4 years, like the beginning roots of the first research that you began to do. When did that start and what was the catalyst?
Yeah, I think it was COVID lockdowns, I think, was actually the kind of thing that got it all going.
Right.
With
Right.
I think a lot of us had a little bit of extra time on our hands. And it was a combination of that. And I remember too, it was right around the time, 2022, I think we were headed for like a tech bear market, I guess, if you will, or kind of the SPAC bubble time. And
Right.
some pretty big contractions in the market and things like that. And as somebody, some of the roles that I've had over time, I do a lot of like editing for financial media companies, the Monthly1 being one of them. And as an editor, I get to read a lot of articles in various areas, whether it be energy, industrial, real estate, financials, tech, consumer goods. I kind of go all over the place. And one of the things that I tended to find was like when people would talk about the great winners of business or the great stocks, it tended to be this small handful of companies, the Netflixes of the world, the Amazons, the Teslas, and lots and lots of attention were going to them, which is fine. It's good. I mean, these are businesses that do incredibly well. I
Some
thought
of
there was
which
a
you've
lot.
owned and have done well for you over time.
Yeah, sure. And also, I would also argue there's probably quite a few that are very, very popular that haven't necessarily been the best investments.
Yeah.
Some of the YouTube videos that we've done, I've tried to make veiled statements about my thoughts on Automotive as maybe
Right.
not the big automakers, not necessarily being the best value creators over time, but gets a lot of media attention because they're popular companies. Everybody wants to talk about cars. Everybody likes talking about cars. It's a good point of interest. But from an actual investor standpoint, it's been a pretty lousy investment for quite a long time. And so reading, I felt like there was this like disproportionate amount of like attention going to this small set of companies when there was a lot more out there to cover. And I felt like there was an appetite somewhere for that kind of content of, people looking for something different, people looking to invest in a slightly different way without, having to read 57 comments or, articles on why Tesla is going to be a great investment over the next 2 years or something like that. And so when I was like, okay, so who are these other companies? What were these businesses that, we don't know well, maybe like the small and mid cap companies that haven't grown to be $100 billion companies that are prominent. And so it sounds like very, very COVID lockdown-y. I just went name by name. I started
Turning over stones.
well,
Now,
no, it wasn't just the stones. It was the list of the entire market. And I went A to Z of every company and like looked at their performance over very long periods of time. And from that list of about 7,000 companies, I narrowed it down to about 600 that were significant market beaters. So about 10% of the stocks on the market what I would consider significant market beaters, not just like, maybe 15, 20% better than the market or percentage points over the market over a 10-year period, but like let's call it alpha, like significant outperformance. And from that list, there were the familiar names that popped up, but then there was this just cadre of companies that I didn't know. I don't think anybody else knew because you start looking at the analyst coverage and maybe some of them had one analyst, maybe some had none. And I just found these businesses fascinating. Like, why doesn't anyone want to pay attention to these, despite the fact that, if you had owned these for a very long time, you'd be doing splendidly. And that was kind of the research part that started this whole thing, was just going and identifying all the companies that had done well.
so let's go a little bit farther back and talk about, because you have to be a person who's wired in a certain way to go down to go down that rabbit hole, because the reality is, if you look broadly across financial media, Tyler, there's lots of people talking about the same 100 companies, right? Making perfectly good livings, creating some sort of value for people to consume this content, for investors to consume this content. So choosing to go off the beaten path, let's talk about your professional history. You spent well over a decade at this point, part of the work you do as an editor, a financial editor, but you've also spent a lot of time as a producer of content, writer of content for the Monthly1 and others. You and I make videos together, some of our short form stock videos. You also manage your own investing portfolio. One thing I'm curious about, your education background is as an engineer. So how much has that impacted the way that you invest and the way that you've approached the market? So the ideas of looking at first principles and really focusing on data versus the story sometimes. Even though I want to say you're a pretty good storyteller, and the very long form content that you write for Misfit Alpha, you have a really good narrative that you thread through there. But tell me about how you came to, like, your background, your history, how that led you down the path of Misfit Alpha.
Well, it is a little bit serendipitous, right? I think for many of us who got their start, certainly we'll call it in the Investing Unscripted extended universe of characters, I think we're all kind of in some way tangentially related to the Motley Fool in some way, which is it's hard not to in this world, because as a financial publisher, they're one of the biggest in the country. And so a lot of people
for people that come to investing with non-traditional finance backgrounds, that tends to be a common place to go through. And for good reason, because there's a tremendous amount of value and knowledge that has been created there for the individual investor, which is what this business is targeted at, not pros. So yeah, that's true. If you were to say the invested unscripted universe, we're a spinoff, right?
I think that's a fair point.
Yeah.
And so I got, similar to how you got your start, it was an opportunity to be honest, I had come back from finishing my MBA in Europe. And, one of the things about having an MBA is you get a network. But the problem is if you have your network in Europe and you move back to the United States, you don't really have that much of a network anymore. Trying to, find a job in the Washington, D.C. area in the 2010, 2011 time, not exactly the best job market in the world. And I just happened to stumble upon the Motley Fools. They had a blog at the time where basically even the ability to get started was basically like, submit your first thing and we'll see how it looks. And as I was looking for other work, I just kind of jumped into this, and it kind of started this world of writing where, unsurprisingly, I think the first thing I ever wrote was about an engineering and construction company. I think it was like Floor Corporation, which again, nobody knows about, but it's an engineering construction company. I was like, oh, maybe I'll have an in there. I had also spent some time working for the National Oceanic and Atmospheric Administration, working on oil spills. So I know the oil and gas industry a little bit. And so I just kind of gravitated towards those areas: construction, heavy industry, oil and gas, things that end up being a little bit more technical, a little bit more by the numbers. I will wholly admit, and when it comes to like consumer trends and things like that, I'm probably one of the worst people possible. The few times I have tried to be a consumer trends like investor, I have fallen flat on my face. And so it just ended up being an area where I could cut my teeth, I could understand it a little bit better. And I thought, I think with an engineering background, I was able to deliver a little bit more of a message that worked, especially having a little in. And then at the same time, oil and gas industry, things like that, tends to be a little bit more plug and chug by the numbers. There's not a lot of art behind it. So, I thought that could be my in. One of the things that I think we all did learn, and certainly over the decade, and we can get into this a little bit, was it's a lot more art than science. Like, yes, it's good to have the science, but when it comes down to the final product, there's a lot more art and creativity in what we do. I almost
if it
like
was
to
just
think
math, all the mathematicians would be investors.
some of them are all the short-term traders, but in terms of long-term individual investing, it does become a little bit more art than science. I almost like to think of it like classically trained musicians,
Yeah.
where the you know all the structure, the form, the kind of the basics are drilled into you in a very like rote sort of way. But taking that and then adding that layer of creativity on top of it
Right.
is very much an intersection of like that sort of world in investing.
Hey everybody, we'll be right back, but first a word from our sponsors. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally, but beyond that, they have company-specific segment and KPI data on around 1,800 stocks. So for example, do you want to see NVIDIA's data center revenue growth? They've got it. Do you like to track Apple's iPhone sales? They've got that too. Or how about nights and experiences booked for Airbnb? You guessed it, they've got it. And they just added around 8,000 ETFs and mutual funds to the platform. The breadth of FinChat's data is truly one of a kind. I use FinChat every single day as I'm researching the stocks in my portfolio, specifically when I want to see how they're doing on KPIs that FinChat is famous for. So to get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes. Hey everybody, we'll be right back, but first a word from our sponsors.
All right. If you're serious about investing, you need to know about public.com. That's where you can invest in everything: stocks, options, bonds, crypto. You can even earn some of the highest yields in the industry, like the 6% or higher yield you can lock in with a bond account. Public is a FINRA registered SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/investing unscripted. Get up to $10,000 when you transfer your old portfolio. That's public.com/investing unscripted. Paid for by Public Investing. Full disclosures and podcast description. Let's circle back around to what exactly, and you've talked around it a little bit, but I want to be very specific with what Misfit Alpha is and what you're looking to find and do. You've talked about these companies that you've identified out of the thousands of potential companies to invest in. You found the ones that the two commonalities are substantial outperformance versus the market over the long term. That's alpha, outperforming the S&P 500, that the benchmark. And the other one is being generally very uncovered by Wall Street, to typically unknown companies. Let's talk about the actual work that you produce, and then we'll talk about those themes, those common things of, as you've researched and profiled 100 companies, the specific things, that the lessons that you've learned so far. But let's talk about what do you produce? What are people signing up for with Misfit Alpha?
Well, it's not a precise science, but what I'm looking to do is do a profile of a company about once a week, typically a weekend production. Admit as the writer, editor, and tax accountant for Misfit Alpha, every once in a while the schedule gets a little bit off, but that's the goal, is to be once a week. And then in addition to that, I tend to do other, I'll call them one-offs. I have a recurring series looking at IPOs. It's another, we'll call it the other kind of Misfit area that I think is undercovered, is companies that are going public recently. And so I've been covering companies coming to market that look kind of interesting based on, reading their S1s. And then every quarter I do a update of my personal portfolio. So it can see what I invest in. I also mention what I've bought, what I've sold, my own personal 13F disclosure, if you will. And then some other recurring things. I've built some market screens based on the criteria of like Warren Buffett's 1999 annual shareholder meeting. And also started like doing screens and investigating international markets. I started with Mexico. I'd like to start diving into some other international markets and give people a little kind of taste of what is available outside the United States. So it kind of goes all over the place, Misfit kind of, in terms of the actual content, but it's all structured around this weekly piece talking about different companies, and hoping to, the goal is to introduce people to these, I think, great investments, wonderful companies that they might not have ever heard before. So it's, discovery. And also, like you said, trying to find the commonalities of great investments over time, and not just like because they have wonderful leaders or something like that. Like, what are some of the common threads that, as we as investors are looking at businesses, what are some of the kind of things that we can all look for that will increase our chances of finding good investments over time.
I want to say this now just to be sure folks are aware of it. Some of your content you put out for free, publicly accessible at misfitalpha.com. And one of the things that our goal, Tyler, with Misfit Monthly is we hope it's something that's going to be valuable and useful and enjoyable for people that don't pay for Misfit Alpha. I want to be clear about that. That's part of our goal. But we also want to see people pay Tyler Crowe for his great work as well, if they so see fit. So I want to say this, and we'll put it in the show notes and I'll mention it again. But we've got a deal with Tyler to get a discount, I think 25% off of your Misfit Alpha subscription. If you go to misfitalpha.com/unscripted, you can get access to the discounted rate. But I encourage everybody just to go to and sign up for the free emails, and you can get a taste of what's out there. But I'm not going to shill anymore until the end. I've done my shilling here, Tyler. Let's talk about those common themes that the learnings as you get to the century mark here of profiles.
Well, yeah, I do appreciate the mid-show cold read on the ads there. That's great radio. So I admit, like, it's taken a long process trying to kind of figure out like what are the things that are the common threads. Like, I think if you were to read the first 3 or 4 that I did, those things didn't really start to emerge. But the more and more I've done it, like I said, it's coming up on 100 now, is the 2 common threads that I have found for the most part. Obviously it doesn't apply to everyone, but the most common threads are adequate rates of return. And when I say adequate, it means that there is some rate of return on invested capital or the assets or total capital or something like that, that is modestly in excess of what it costs to run this business. There's a lot of businesses out there that do this, that beat it, but sometimes there's this fine line where if you generate returns in excess of your cost of capital by a lot, say you're getting returns on invested capital of like 20 to 30%, it looks great, but then the competition really starts to emerge. And all of a sudden, what was a major advantage for you or a wonderful time of returns starts to diminish over time as you start to get into competition with others. And so that's where it starts to diminish. However, these businesses that, generate 12 to 15% returns over very long periods of time, they can, they beat their cost of capital, but they don't generally attract as much attention from investors and from the market. There's not everybody's going out there and be like, I need to make the next great valve for industrial manufacturers and be like the next great valve producer or something like that.
Right.
And so businesses
capitalists
like that
tend to go after, especially well-heeled capitalists that have venture backing, tend to go after either massive markets or massively profitable markets.
Yeah. And so if you find yourself in the middle as a business that can generate decent returns and you can grow your value of your business, and I kind of fly under the radar a little bit, maybe do the essential things that aren't going to be massive growers, but are going to be adequate for a very, very long time. It can do a lot for your portfolio or as an investment for many, many years, decades, or even more. Some of the common threads that I've seen in this regard is businesses like distributors, whether it be auto parts distributors or HVAC distributors. You can kind of go up and down the list, and it's spectacular the amount of companies that are publicly traded that are distributors who have been spectacular investments over the long term, but mostly because they're great operators in fragmented industries that can consolidate and generate adequate returns without, some giant private equity backed person coming in trying to like disrupt the market from them, and they just get to play in their own sandbox. So there's a lot of businesses in this regard. I just mentioned distributors, but I can think of a large cadre of manufacturing, chemical, up and down the investing universe that is out there of companies that fit this profile. And a lot of ones that I have found or have profiled in my site have kind of fit this description.
So let's talk about thinking about distributors, for example, that cohort. I know one common theme with that is that chances are if you don't work in the industry they serve, you've probably never heard of them. So that under the radar aspect is certainly there. So let's talk maybe, and I think we could use auto parts, I think is a good example, or something in the automotive manufacturing suppliers as an example, maybe a company or two that you've profiled that stand out, that chances are even a listener to Investing Unscripted that invests in individual stocks and follows the market and likes the research, and there's a good chance that you've never heard of. Is there a company that really stands out?
Well, if we're talking about distributors specifically, I think the company that has stood the test of time and is really interesting is called Applied Industrial Technologies. They are a distributor of basically the automation process equipment for, like, if you're making a manufacturing line, whether it be a semiconductor foundry automation line or a automated automotive production line, or basically anything that involves building a factory that has some form of automation. The things like the conveyor belt systems that move your product all up and down the line. It's the business that would, collect everything from the vendors and then distribute it to whoever the manufacturer or the construction company on site wants to build it. And so surprisingly profitable business over a very long period. And one thing that you find with a lot of distributors is they are also responsible for a lot of like the service and warranty work, which is also what makes them kind of quite profitable over the long term. Is when you're servicing, I don't know, an automated manufacturing line, the more stuff that you have out there at any given moment, it increases your total, like, call it fleet, if you will.
Yeah.
Which, service revenue is a wonderful thing. And it's businesses like this. One of the reasons that it's so successful is, and especially with distributors, is they don't tend to have a lot of capital. They're not like a manufacturer with factories or anything like that. They probably own a couple warehouses. Heck, they might even lease them. And then all their assets are just the products that they're bringing in from their vendors and selling to their consumers. And that, being able to manage that inventory very well and turning inventory over several times in any given year can turn what seems like a pretty mediocre business into a stellar return machine for investors.
Investing Unscripted is brought to you by the Chit Chat Stocks Podcast. That's right, another investing podcast you need to add to your listening rotation. My name is Brett, one of the hosts, and I produce 2 episodes weekly along with my co-host, Ryan Henderson. On the Chit Chat Stocks Podcast, we talk stocks, a lot of stocks, from the hottest names to undiscovered gems, interviewing sector experts, studying super investors and why they are successful, and we have a fun time while doing it. Follow the Chit Chat Stocks Podcast on YouTube, Spotify, or Apple Podcasts, and never miss an episode.
So two things that stand out from there. Number one is from the obscurity perspective. This is like third order obscure. You've got the consumer facing company or customer facing company that maybe retails the good or manufactures it, like an Apple, or if we want to get real tech heavy, Taiwan Semiconductor. Those are companies that people are more likely to have heard of, right? But then you've got the company that actually does the manufacturing, which we could use Taiwan Semi, but for Apple, they use third-party manufacturers, some of which we know about. The more specialized you get into the automotive industry, the less likely are you have to heard of the company that's actually doing the manufacturing or the assembly. But we're not even talking about those companies yet. We got to get to the company that distributes the stuff that goes inside the factories. So with obscure, right? So, and I know from having read the vast majority of the profiles, that tends to be pretty common. It's a company that's somewhere in the middle that's in an important role that nobody knows about unless you're using their equipment, and then they're extremely important, or their service, and they're extremely important to you. And one of the things that tends to stand out about those businesses is when the product or service that they provide is extremely critical, but not an outsized portion of your costs. That's where these companies can tend to capture good margins, right? Because the value of what you provide and the predictability of you being really good at your job is more important than shopping you, because it's not a big line item on your operating expense or cost of goods sold, right?
Yeah, for some reason, there's a lot of value in being the rounding error for very large companies, right? To use your semiconductor example, right? You have the Taiwan Semiconductor manufacturer. So when they're building out their plant, they're going to be ordering equipment from ASML and Lam Research and a lot of the other companies that, build the equipment that is going to go in a Taiwan factory. And then they'll go to a distributor like Applied Industrial Technologies to, build the connective tissue that makes that line to go from an ASML machine to the Lam Research machine and back and forth. They're the one that's going to have that those pipings, the automated systems for those that aren't the most technologically advanced part of the system, but they're necessary to make the thing run.
Mission critical. You
Yeah.
can't operate without them. I want to tell a little story of my past history. I was in outside sales, kind of a technical sales for a long time. And this is a story I've never shared with any of our listeners before, but I think is really applicable to a lot of these businesses and the way their customers think of what they do. I sold printing systems and document managed software and solutions for a pretty large company. And we were trying to get in with a very large bank. It wasn't one of the biggest banks, but it was a pretty large bank. And the people that I was working with that had the relationship with the customer, we went in to meet with a pretty high level decision maker at this bank on a national basis. And the presentation that the sales team had put together was mainly focused on lowering cost for our solution versus their long-term vendor, trying to undercut that long-term vendor. And the decision maker, who was head of operations, at some point close to the end of the presentation, kind of was looking, we were going through the numbers and just kind of smiled a little bit. And I asked him, I said, okay, I see there's something going on in your brain that you don't want to say, but I think we probably need to hear it. And he said, the savings you're talking about, I spend that much every quarter to send electricity to my ATM machines. So my response is, so you're saying it doesn't matter. It's not compelling. He says, that's absolutely what I'm saying. To disrupt our long-term relationship with a vendor that we trust and we can count on for things that are mission critical is not worth me saving this amount of money over. So it's exactly what you were saying before, that being somebody's rounding error on these large operating statements and being counted on is a great place to make money. So I think that's definitely like a really valuable lesson of a lot of these misfits.
And when you start to think about it in that way, there's a lot more of an investable universe that tends to pop up. And then this kind of brings us to the second point, and which is, trying to tie this all together, is as much as we talk about management as like good quality leaders and things like that, the thing that I have found as like one of those, signal versus noise components is not just who management is, but also how they're incented to do their job, or how they're paid, or how their compensation affects their decision making over time. Because
I'm gonna pause right here on this, Tyler, because we did an episode, Jeff and I did, it's been well over a year ago, where we talked about incentives versus goals. And we talked about this exact thing. And there tend to be with company, and we talked about it more from the perspective of the individual investor, where we lay out our goals, we have our long-term financial goals, but then we also have the incentives in our lives that affect the actions that we choose to make. And then thinking about it in terms of the managements and the employees in companies, and my experience when it comes to this, and I want you to talk more about it and the theme that you found, but I really want to hammer on this one because I want people to pay close attention, is there tend to be companies that have generated alpha, there tend to be two when it comes to the comp plan. Companies that have generated alpha despite their comp plan because the business is just so good. Alphabet with Google, that business is so good. For all of these other businesses, having a comp plan that really is aligned with creating per share returns and value, that is the incentive for management to do the right things versus things I know you're going to talk about, and I'll let you talk about, I won't steal the thunder, about the things that maybe make a bigger business, but don't create value for shareholders. So Tyler, things got a little loud in the background there. I know that was part of your reason why. What just happened there?
My 4-year-old decided he wanted to play fetch with one of our dogs and decided to come in and be as loud as possible. Well, he did it. So yeah, let me see if I can try to collect myself and answer your question again. But yeah, so much of a lot of these companies, they're not necessarily founder led, because maybe some of them have been around for 100 years, maybe more. But what seems to be a common thread is having a management be incented in a way that aligns with the shareholders in the closest way possible. I think it's almost impossible to have 100% alignment between management's goals and shareholder outcome. It's practically impossible.
Well, the reality is humans are lazy. Even the hardest working of us are going to find the least restricted way to reach that goal, right? The shortcuts, right? So building comp plans that minimize the ability to do those things is kind of the key. What are the specific metrics that you've identified that tend to be aligned with the best of these misfits?
Yeah, I think what I've found is that compensation structures that are built in three ways, because I think there's three things that all investors should look for in the way that management teams are compensated. Obviously, growth is a key component, because you can't just have a dying business. If you're managing for a dying business, that's not great either. But also the other ones is not just growth, but growth on a per share value. I think you and I have covered in videos and numerous other writing over the years of companies that grow but don't create value because, I don't know, bad acquisitions or pursuing, very, very fast growth, but the amount of the cost to pursue that growth was so high that it didn't really do much to, create value over the long term.
So, value creation versus empire building.
Right, exactly. The empire builders, real estate guys who use tons and tons of new shares to buy a building or something like that, and you get
Often
marginal
when the
returns
stock
as a
might
result.
be down, and you're versus when the stock is expensive.
Right. So having some sort of guardrail on management to protect the per share value of your investment is critical. It kind of, I guess you could say, adds a degree of difficulty to that growth, so that it's not just growth for growth's sake. And then the third component is some sort of like incentive structure to maintain a level of capital efficiency, whether that be, return on invested capital, return on assets, sales as a percentage of inventory or percentage of working capital, some sort of way of saying, like, I don't know how many of you guys have played like 5-card stud poker, where it's like where you play jacks to open, where it's like you have to meet this minimum threshold of something for it to actually matter. And
Right.
it's the same idea, being like, you can grow this business, but you have to have a minimum threshold of returns on this business for you to be actually compensated. And so obviously, depending on where the business is in its life cycle, it's going to change the actual how those three things are oriented. If I'm in a mature business where there's maybe not as many growth opportunities, probably you want that compensation structure more structured towards the per share value and the capital efficiency. It's like, we don't have a lot of opportunities to grow this business, so we need to squeeze every ounce of efficiency out of this that we can to create value. Maybe it's a growth business that has this huge market opportunity. You're probably going to want it to orient to a little bit of growth, but at the same time, you don't want them to just completely disregard costs of things. Capital costs money, whether it be issuing debt or whether it is equity, because equity has to, grow over time. Shareholders don't want to just own something that stays at the same price for 15 years, or it generates the same amount of earnings per share, because, if that's the case, might as well just buy bonds, right? So with those three elements, oftentimes in the companies that I've profiled that have been monumentally successful, there is at least two of those elements in a management's compensation package, and some of the best ones have had all three, being able to, I guess, walk and chew gum at the same time, if you will. And not only that, also having a management team that is not just compensated in those ways, but they're challenged by their board of directors. It's amazing how much.
Are you saying if they max out their bonus every year, then maybe they're not being challenged especially if the stock price isn't going up and cash flow per share is not going up over time? The comp plan's probably not aligned.
Yeah, you're looking at. There's a common thread you see in, the proxy statements or things like that, or where they lay out the compensation structure for a business. That's like, we need to retain talent. There's this, I guess, this perpetual fear that, the talent within your industry, within your company is going to go away, and which is fair. I don't disagree with that element, but if you have a board of directors that is just basically signing a check that says, congratulations, you got your max compensation this year, every year for 10, 15 years at a time, the board of directors is almost being, is not serving your interests.
Yeah.
The board of directors is supposed to be representing you, the shareholder, and the management team works for you, the shareholder. And if the board is just handing out these excessive compensation packages saying that they did the best job ever, almost if it's a participation trophy, perhaps they're not running the business as well as they could, and the board of directors is not challenging your management team to do well enough.
All right, Tyler, let's start to wrap things up here. And I want to lightning round you a little bit. We try to do our lightning round with guests when we remember to. This is going to be a recurring theme with Misfit Monthly, but I want to lightning round you now with 3 things that just jump out to me as I think fun ideas that also might be kind of compelling for listeners too. First question, what stock in the Misfit universe that you've profiled so far has been most surprising?
I told you something just a minute ago as we were prepping for the show, but I'm going to change it on the fly.
Love it.
I'm going to mention a company. It's called Patrick Industries. This is a company that manufactures basically the components that go into mobile homes and recreational vehicles and boats and basically anything that's involved with discretionary income. And here's what was fascinating about this company to me is this is a company that has basically tripled the market over the past 30 years, which sounds great as an investment, right? But this is also a business that has experienced a 97% drawdown in its stock and a 70% drawdown. So 70% drawdown during like the dot-com bubble, and then a 97% drawdown during the great financial crisis. And despite those massive, massive drawdowns, since its IPO, it has tripled the market. It's fascinating to me how a business that is so sensitive to consumer discretionary has still been able to eke out incredible shareholder returns, despite probably making its investors the most nauseous that they possibly could.
Yeah. So I want to be clear for people to understand what that business is. This isn't the company making the Winnebagos or the Ranger boats. They're making the components that go to distributors or directly to the manufacturers that then sit on shelves. So when things get bad in those hyper cyclical industries, these are the first people that get told, yeah, we don't need any more of your stuff. We're going to deplete our existing inventory. So their taps get turned off the first and the hardest. And then they're the last ones to get called when there's some signs of a recovery, because the companies that are manufacturing those fun things that we only buy when we have money, they're still sitting on all their parts and the inventory that they couldn't push out to the retail end of it, which is also still sitting on their inventory that they couldn't sell when nobody had any money.
Yeah. I think it's the only business I've ever seen where at one point in its life, it traded for 0.01 times book value.
That's cheap for those taking notes at home. All right, Tyler, let's go in a different direction here and let's talk about one that maybe you went into it with high expectations, but you weren't really pleased with the way that you viewed the company coming out of your profile.
I'll shift that around a little bit, and it's get kind of wanting more out of it. And it's a business called Cavco Industries. They are a modular homemaker. So basically, if you are not modular, like manufactured homes, if we have the 2 ways of building homes in the United States. It's either modular or stick built. And modular homes are basically built in a factory. And to me, this is a business that it seems like America is sorely needing in a time of a housing shortage. It's actually a very efficient way to make housing, and one that can be a high return when sales are robust. But somehow this is a business that just cannot seem to gain traction in terms of sales. They have created value for the same reasons we were just talking about. They're very efficient with their operations. They're able to, grow per share value. But it's been shocking to me that Cavco and other companies in this particular industry have not made more of a headway in kind of solving the housing problem in the United States, despite the fact that, it takes them 6 days to build a house versus 2 to 3 months for a stick built home.
All right, last question here. Let's go bigger picture. You've spent the majority of your time with Misfit Alpha profiling and focusing on US and North American companies. You've started looking globally. Now, anybody that follows the Investing Unscripted 2025 portfolio contest and has looked on the sheet, the Google sheet with that, and looked at your list of stocks and just scratched their head, knows that this is something that you're very passionate about and that you're interested in. I want you to think Misfit markets. So again, the idea of Misfit Alpha, opportunity, businesses that have generated wonderful long-term returns, but are largely unknown, uncovered. What's a market out there, an international market, where you think is kind of a misfit, where there's wonderful opportunity to create value, but doesn't seem to be getting enough attention from the retail investing market and the investing media that we should be paying close attention to?
I'll give 2. If we're looking more for the growth side of things, I think you and I have discussed it before on YouTube videos and plenty of times in our like private Slack channels and WhatsApp messages and things like that. I think the Mexican market has an immense amount of opportunities over the next several years. Real estate development and construction have been very, very strong outperforming sectors in the Mexican market, while some of them are the consumer staples are starting to gain steam as, discretionary incomes start to pick up.
The Mexican consumer is starting to really generate some spending power.
Right. So in terms of a growth one, and then in terms of just quality businesses that I think may not get as much attention, I find myself ending up on the Stockholm Exchange, probably more than I should. So Sweden, lots of innovative companies doing some really interesting things, while at the same time, maybe not the most like dynamic market in terms of growth, but quality companies that know what they're doing and can generate good returns, as well as if you're looking for something maybe more dynamic in the higher tech space, maybe even healthcare. There's a lot of interesting companies going in, I will say Stockholm, but you could probably branch that out into just saying the Scandinavian countries in general.
Tyler, this has been a lot of fun. I appreciate you being receptive to the idea to do Misfit Monthly. I hope our listeners enjoy it as much as I've enjoyed this conversation.
I'm looking forward to doing this a lot more. I feel like you and I are going to go on some very long tangential rants because that's what we end up doing anyways. And, sometimes they're just fun, but other times I think we actually do get down to some very important investing lessons that, will be helpful for people over time.
I think so. In this format versus our 10 to 15 minute YouTube videos where our rantability is more limited, I think you're right. I'm going to do a couple of call outs here as we wrap things up. So first, just remember, if you want to pay Tyler for his work, go to misfitalpha.com/unscripted to get that 25% discount. Even if you're not ready to subscribe, go sign up. He does some good free stuff he sends out every once in a while that's worth checking out, and you can keep in touch with that. I also want to ask for questions, because one of the things that we would like to do as part of Misfit Monthly is take some listener questions specifically for Tyler. You know how to do it. If you've sent questions to us before, send them to us the regular way to Investing Unscripted, all of our socials. You can send them to Tyler as well directly. Tyler, how do people find you on social?
Blue Sky is going to be the most likely place to catch me. I'm a pretty infrequent user, but it's at Misfit-Alpha. I'm also on Twitter, although much less now, just out of kind of
the same reasons the rest of us are. It's turning into a trash heap. Get those questions to Tyler there, or you can send them to us through our Investing Unscripted. All right, we're going to wrap this thing up here. Again, Tyler, thank you so much for coming on. My usual close, we're going to give our experiences. We're going to share our answers. We're going to talk about the misfits that we found out there, but it is up to you to own your own research and to find your own answers. We're glad to be a part of your process, but you own that process, people. You can do it. All right, we'll see you next time, everybody.